Okay, this is going to be a weekly recap from the 25th of April to the 29th of April, the last week of April. And this was the first week that I went ahead and upped my dollar risk level to $15, coming from $10 with OTC setups, and I'm still trading $5 in terms of dollar risk level with listed stocks and as well as OTC swing setups since I don't trade those very often, or I just feel like I have less experience with that. But to really summarize this last week of April, as you can see here, none of the setups I traded really worked, and a few of them did work, but not when I was necessarily in the setup. And I think that really summarizes this. I had my first red week in a while, $9.02, and it's not bad that it's my first red week in a very long time, and it's a very small amount, at least when you consider the other weeks and how unoften I have a red week. I had a total of 6 trades, 3 of them were green trades, and that was a 50% winning percentage rate, which isn't bad considering the fact that none of the setups worked when I was in it. And half of my trades were according to my dollar risk level. Some of them were very close, but as soon as I can get myself a nice green week and I can see that most of my setups are according to my $15 risk level, if it's a OTC setup, I'm probably going to stick with 15. But if I can get into the right track and continue forward and then have that good week, I'm going to go to $20. And yeah, the stats here are just, yeah, they're pretty bad. My average dollar gain was really small compared to my average dollar loss, which was really summarized by this last trade. I, you know, wouldn't have had to have traded this one, and it would have helped with the stats, but that's fine. And my average percent gain was horrible compared to my average percent loss, because this one was a 7, almost 8% loss. It was a very wide stock, and my average position size was also much smaller. Just not the best, but I think that was fine considering how there were like no setups in the beginning. They were not too ideal, but I did have a chance to have actually a pretty profitable week with SYXX. And yeah, let's just go ahead and go over the trades and setups one by one, starting with ILUS. ILUS was a weak morning panic bounce play for the 25th. Let's look at ILUS for the 25th. Not a very significant day for day trading, but this one was interesting because it broke this, I would say, this roughly 13 level, and I thought it could be maybe something really nice in that it breaks that important level, but then it immediately comes back because it was such an important level. Looks like it did try to reverse later, but let's take a look at the 25th, which was way back here. I was in at 9:38 a.m. at 12:16, so 9:38 was right here, 12:16, and I was essentially in it because it looks like the morning panic bounce play was here. It had the drop from the 12.6 level, it got as low as 12.1, and now really looking at it, it wasn't really the best setup because it wasn't down that much, but I did take the trade into consideration. I was probably risking this 12.1 level potentially breaking, and then worst case scenario amount at 12, or really bad worst case scenario amount in the 11s if it were to just have a really big red candle and wipe everything out, which it looks like it actually did do much later here. And again, I was in right here at 12.16. I had a pretty large size because this wasn't my first trade trying to trade a $15 risk level, and I wasn't actually close to 15. I guess I was close, but I didn't get to 15. I had an $800 position. I got out at 941 at 1215. So 941 was right here, and it did briefly break this 1216 level, and it got to 1223, but the way it was doing it was not very nice, and it looked like it was starting to run out of momentum and steam. It wasn't really down that much on the day, and there might have been a large seller at the ask. I cut it right here. I lost a very tiny amount. I just didn't like the price action. It did have a few attempts to VWAP, but it would just be like one or two prints. It wasn't actually something consistent. And as you can see, it dropped to another level. So yeah, it clearly didn't work the weak morning panic bounce play, but it did eventually downtrend and return at the 10 o'clock time period, so much later, but that was a pretty good attempt for what that was. Let's look at the second trade, which is IOUS. Now a morning panic bounce play, so I probably consider this one to be a regular morning panic bounce play because it's down more on the day. Let's look at that. I was in at 952, 1182, right here. I was in it right here. So I thought, okay, maybe this is the official morning panic bounce play, because at this point it's at 12.6 and I got as low as 11.7, so that's not too bad. That's like a 9% drop. And then I was probably in it right here because I thought it was starting to turn around. The level to break would be this 11.9 level, and then maybe it can go back to 12 or VWAP, which would be ideal. As you can see, it didn't really work out here. It had one more downtrend before it ultimately made a move for VWAP, which is nice, but I never traded this one, and I don't regret it because there were two very large sellers at the ask. And if you watch the video I made on this day, I go over it in detail, and I got out of the trade at 953, and that's 1184. I got out right here, 1184. I probably just didn't like the price action. I sold for a slight profit, and I didn't make enough to cover for the other trade because according to my $15 risk level and where it was in terms of the price, I had to trade a much smaller amount of shares, but this one I did trade according to a $15 risk level. Yeah, not bad. Didn't work out. It did ultimately here, and that would have been nice. Let's just see in theory what it would have been if I got in at 11.65 and sold at, let's just say 11.9. Yeah, it didn't offer that much range either, or maybe I was just super duper anxious and ready to jump in, starting to trade a $15 risk level, and I didn't pick the most ideal setup because it wasn't really very nice in terms of a percent difference. Now maybe I would have traded more shares with this price range, but yeah, that seems to be the case right there. Not really the best setup. Let's look at BRQS. This is a VWAP breakout that didn't work out. Let's look at BRQS for the 26th. Pretty nice listed stock because it was looking like it was trying to break past this 39 level, if not the 38 level, and it did continue forward. It looks like it really hasn't done much ever since, but this was a pretty nice setup. Let's look at the 26, which is right here. I was in at 957, 38.30. So it was way back here. Let me zoom in a bit more actually. 957 right here, and I believe I was in at 38.40. I got in right here because it looked like at the time the inverse head and shoulders was done. I thought this was a shoulder head, and this little thing here was a shoulder, and now it was uptrending, and I thought it was going to break VWAP, and I traded accordingly to that idea. And as you can see, this one did not work out. It rejected, and it had a pretty excessive wick, and I sold, I believe, into this candle, and then it eventually turned around very quickly, and it shot up to the 42 level. So the setup did work because it ultimately made an inverse head and shoulders here, the shoulder, the head, and then the shoulder, but it didn't work when I tried at VWAP. And one thing I learned with this type of stock in general is that if I see a stock that has a lot of big wicks like this one did, I have to take that into consideration and maybe not sell on a dramatic downtrend because it's known to have wicks. And this was a wick. As you can see, it had a wick here, it had a wick here. I have to learn and check for that before I consider a trade, or at least, if I'm in a setup and then it has a wick, maybe, it really stinks, but I can be able to maybe potentially take the risk and hold on to the trade. And then when the wick is done and it kind of comes back near a much better price range, I can then sell and then not lose as much. I think that was a good lesson with that. And this thing offered a really nice uptrend later on, but I just didn't like how it was a very wicky stock. Yeah, that's pretty much what it says here. Okay, let's look at the next trade, which is DWAC, VWAP, dip. I'm gonna go with a dip buy, higher low. Let's look at DWAC for the 28th. Right here's the 28th. It did start to try to turn around. If you could draw like a trend line, you can see that it was starting to break this level and it started to reverse. It actually got much higher, but this was a pretty cool one. And let's go ahead and look at the 28th. It had a very nice spike after hours, but I traded it much earlier. I was in at 9:58 a.m. at 47.12. I'll actually zoom in a bit more so it looks clearer. 9:58 was right here, right? Just to make sure. Yeah, 9:58, 47.12. Right here in this wiki candle, I was in at 47.12. Why was I in it? Well, I would have traded this VWAP breakout right here. Definitely because it was in the morning, but I just didn't see it when it happened. It's uptrending overall. It kind of downtrended, trades back and forth within this range in the morning. And then it starts to look like it's trying to pick itself back up. And when it breaks VWAP, it made a pretty nice move for what the stock is, going from that 46.75 level as high as 48.35, which was pretty cool. And my idea was is that it had this spike here, and now it's going to downtrend, get under VWAP, and then be a higher low, and then it can continue the uptrend. This worked out, but I was way, 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 way too early. I hear some kind of a alarm. I'll be back in a moment. All right, I am back. I'm not extremely sure where I left off, but something I want to know, at least with this kind of setup, and one of the two lessons I learned is that when it comes to these dips under VWAP setup, as you can see, this one did work out, but I was way too early when I traded it, and that was also the same issue I had with SYSX, and I had pretty much two lessons, and one is to judge when to sell on certain wicks or excessive drops. If I maybe I'm risking a certain level and it breaks it, but it breaks it because somebody's just selling a whole bunch of shares, it seems like, and it's a little exaggerated. Instead of selling as soon as the risk level breaks and then I'm out for a loss because it had a pretty big downtrend with a whole bunch of volume, and then it comes back immediately. It might be better to just, at least I'm going to consider waiting to see if it could eventually come back, and that it was only because it was a whole bunch of volume. Now if it gets to like a support level or a risk level very gradually and it starts chipping it, it starts breaking it, at that point I'll consider cutting it right then and there. But I think that can help me be a lot more profitable. Of course, there's going to be that one where maybe a whole bunch of volume goes through, it breaks my risk level, and then it continues to drop even more, but that doesn't really seem to happen that much, and I'm willing to risk maybe one of those happening, and then it's still worth it in the long run. And then the second idea is to wait for a reversal with dip under VWAP setups. This one again did work out, but it still continued the downtrend before it eventually started to turn around, and it did offer a move from the 46.35 level to the 47s. It got to VWAP. I think I need to wait because it seems like I'm getting too early. And yeah, I think that will help me get a lot better. I got out the next minute, 9:59 at 47.20. Right here, and I got out because immediately with this candle I realized that this thing was trading a super wide like spread of 45 cents, something crazy like that. And that usually means that it might be kind of desperate and it's trying to really uptrend. Most stocks when they start trading normally, but then it trades with a really wide spread because they're trying to get at the uptrend. And I got out for that reason. Normally something I see very common with OTCs, but this is something with a listed stock, and it did continue the downtrend. But again, the setup still worked out, and it came back, still offered a higher low barely, then like a double bottom, and then it eventually started to work out. So this could be something that I can try to be a part of and learn from, and I think that was a good lesson for what that was. Let's look at the next trade with ABML. ABML is a swing setup that actually ended up being a day trade. I got in and out of it the same day, but I was considering this for a swing setup. Let's look at ABML for the 28th. The idea with ABML, and I think it might be better if I change this to a daily chart for just a quick moment, is that this thing is downtrending, right? But if I were to, it looks kind of weird here on Thinkorswim, but in theory, you could draw a trend line, and I saw a trend line break, but I decided to get out of it because not like these don't always work. But as you can see right here, there's a trend line, and then it started to break it right around here. Maybe not perfectly, but the trade was on the 28th, right when it looked like it was trying to pierce through, and I thought I could try to turn around over a longer period of time, but as you can see, at least by the next day, it's still downtrending. And I also thought it was like the head right here of an inverse head and shoulder. So here's the shoulder and then the head, and then it uptrends to the 130s, it downtrends, and then maybe makes a shoulder and continues. I just thought, maybe this isn't actually the best setup, and I changed my mind and I got out of it for that reason, which was probably a good call. And I traded a very small $5 risk level. My idea was that worst case scenario gets to $1 and I'll cut it. And if there's slippage, I'm out at 98 cents. But let's go ahead and look at an intraday chart for this. And I guess we'll put it on the 28th as well here. I was in at 1:33 p.m. at 107. So right around here at 107. And I liked it because it had a downtrend from this 110 level. It got as low as 105. You can see where VWAP is, and it started to hold this level. It started the uptrend, and now it was playing off of the VWAP level. So I thought that, the momentum was good for a setup like this, and I was in it for that reason at 107 around this point right here. And it did uptrend. It did get to $1.10, but it did downtrend the next day, and it didn't really do much the following day, but it kind of worked out. And I got out at 206, 1086. So I got out right here. I got out somewhere around here. I sold it while it was still up. It did again close around this $1.10 level, but again, I just didn't feel good with the price action, and it did ultimately downtrend, although not very much. But yeah, maybe this could be something that can turn around over a longer period of time, but I just lost confidence because it doesn't have to turn around. And if I remember it correctly, this might have been one example. Yeah, I still have a trend line for this too. This one had a downtrending trend line, and as you can see, it broke it eventually, and it turned around just a little bit, from the $8 to the $10. But look, it went to the $6, and it just kept, downtrending. And, I just didn't want to play games with stuff like that. So, I gave up on the idea for that reason. Maybe it's not something I'm necessarily that experienced with. I'll keep trying perhaps, but just because the stock is downtrending and then breaks the trend line doesn't mean it's going to immediately just bounce back. And I think that was a pretty good lesson with that. And yeah, you can see this was another similar type of stock pattern, and it didn't work with that one. Let's look at the last trade, which is SYXX on the 29th. This is the first dip on their VWAP trendline break. Let's look at SYSX for the 29th. Right here, I did have it on my watch list because it did uptrend the other day, and this was a pretty nice move towards the upside. Unfortunately, it does kind of trade like KG, which makes me think it's going to have a really sharp red day at some point. But this thing offered a lot of move towards the upside. And let's highlight it. I traded it way, way back here, so I might as well just zoom in a bit closer. Maybe not that close, but I was very hesitant, but I actually could have been a part of this setup if you watched the video that I published on the 29th. This was a pretty nice move, but I was in at 955 at 17.8. Right here, 955, 17.8. Why did I get in? Second green day, had a downtrend, really nice spike. Now a downtrend, and it just gets under VWAP, and I'm in it for that reason. And if you were to draw like a trend line, right, from these levels right here, let's say give or take something like this, you can see I'm in it right here because it just broke that trend line. And it was right under VWAP, and it just had a previously big spike, and now it came back. So I thought it could try to continue the momentum, which it did do, but I guess I was thinking too exaggerated for what this one was. And just like DWAC, I think I need to learn and just wait for it, if it dips under VWAP, to continue the downtrend until it looks like it's trying to turn around. So, maybe around here, when it hit a bottom and then it hit this high and then it downtrends a little. But then it's right here and it's pretty close to VWAP. I'm in at 17.4. It gets to the 19s. Makes like a confirmed, I guess, breakout over the VWAP by dropping towards it and holding it. And then it gets to 20. That could be a setup I can totally take. And I got out 959 at 16.4. I got out right here, which sucks really badly. I was in it right here and I got out right here. And as you can see, a whole bunch of volume was dumped. And this was an example where it broke my risk level, which was 17. But it was only because somebody was dumping a whole bunch of shares. As you can see, this was the most amount of shares for most of the day, I believe. And yeah, all of the shares were dumped. And that's why it broke the level. And I saw it at the very bottom. But as you can see, the next candle, it went all the way back up, and I could have sold for break even, maybe a slight loss. Definitely a lot less than what I lost trading it, selling it right here. And then it did have another candle with more volume, but then it eventually did turn around. So I guess whoever had 4 or 5 million shares of dump probably feels really bad because this thing closed at the 4-cent level, and this was around, the 1-cent level. So that was pretty impressive. And yeah, this is an example where I could probably be able to sell for break even or a slight loss and, be out of the trade because it did break the risk level. But, I'm not going to sell it immediately when it breaks it, because in this example, it was a lot of shares being dumped, and that was it. So yeah, that's really about it. I'm going to call it off right here. I hope I can be better next week, God willing. And I'm still thankful for the opportunities. I got to keep going, and I'm going to stick to a $15 risk level until I can see that a lot of the trades are taking are around that $15 risk level. And I'm also doing my best in terms of trading, even if the setup works out or not. It's, how I traded the setup and how I learned from it. That's all I have for this video.